Look, if you're staring at your bank app this week thinking, why does everything feel tight when the news keeps saying markets are booming? You are absolutely not imagining it. We're in this weird, tense moment where stocks, AI, even Bitcoin are having a party, and yet your rent, your debt, your job anxiety haven't really eased. Tonight, I want to unpack one central idea: the fragile boom. Why does the world look rich on TV while your life still feels like it's running on fumes? If you're feeling confused or a little cheated by that gap, this episode is for you.
And the key word there is fragile. Things don't look bad on the surface. In fact, global markets look fantastic. But underneath, the supports are cracked. Household debt is heavy, costs are sticky, and small shocks travel fast. So if your life feels more precarious than the headlines suggest, it's not because you're doing something wrong. It's because the system you're standing on really is wobbly.
Let's make this simple. Imagine the economy as a kitchen. The fancy stuff on the counter is the stock market and crypto. Shiny gadgets, the expensive espresso machine. But what actually decides how your life feels is the plumbing and wiring behind the walls. Your wages, your rent, your debt, your job security. Right now, the countertops look amazing, but the pipes are creaking, and that's why your day-to-day feels like it could spring a leak at any time.
Let's explain this like we're at a family barbecue. Why are markets up while your wallet feels empty? For the last decade, we spent a lot of time buying those nicer appliances. Cheap money, tech stocks, AI. That's the boom. But we didn't really fix the plumbing. Housing shortages, higher interest on credit cards and mortgages, governments stretched thin. So the water still runs, but any small crack, a rate move, a climate shock, a political crisis, can mess up the whole house fast. That's the fragile part.
If you're feeling that disconnect, you're not crazy. You're just noticing the difference between the showroom and the plumbing. The plumbing is where your life happens. Your rent contract, your grocery bill, your boss's budget. The fragile boom is this. Asset prices look strong because money is chasing a few hot stories, while the everyday systems you rely on are still under strain.
The cracks in your wallet, approximately 4:30. We need to talk about where that tension shows up: your rent, your debt, and your job. Let's go room by room. Start with interest costs. When central banks raised rates to fight inflation, they made every form of borrowing more expensive. Even if they start trimming those rates now, they aren't going back to the ultra-cheap levels we got used to. This means landlords, small businesses, and you are all paying more just to carry debt.
So your landlord's higher mortgage paying becomes your rent. Your grocery store's higher financing becomes your food bill. It's like the whole building's water bill went up, and everyone's passing the cost down the pipes until it hits your kitchen tap.
And that leads directly to credit cards. In a fragile boom, people lean on plastic to bridge the gap between paychecks and prices. But those rates are often 18% or more. Every month you carry a balance. A chunk of your future income is already spoken for. That hidden interest leak is often why you feel like you're working hard but not moving forward.
Then we have shocks to basics. Why does the grocery run still feel like a gut punch? Because climate events, supply chain hiccups, and geopolitical conflicts keep hitting food and energy. These act like a non-negotiable tax on basics. You might see prices dip a little, but the floor is higher than it used to be. You end up cutting from the few flexible parts of your budget: outings, small joys, which is why this doesn't just hurt your wallet, it hurts your mood.
The last crucial spot is your job stability. In this current split economy, companies are optimistic enough to invest in new tech like AI, but nervous enough to cut costs anywhere they can. So they'll spend on automation and a few superstar hires, and then quietly trim headcount in roles that look repetitive.
If your job is like doing the same recipe over and over, same steps, same ingredients, that's the part of the kitchen a robot arm can take over. Customer service scripts, basic data entry, routine paperwork. Those are the first burners to get turned off when the boss is scared of the electric bill. If your job feels fine but fragile, that's not in your head. It's the logic of a world where bosses are told to grow and cut risk at the same time.
Paths and levers. Resilience versus fragility. Approximate 430.
We're not predicting a crash, we're describing a tension. Let's talk about where this could go. Paint me two futures based on whether the cracks spread or the system starts to heal.
Path 1. The fragility path. This is where the cracks spread. Central banks remain stuck. Inflation doesn't fully fade, but growth slows anyway. Governments argue instead of fixing housing. Companies lean harder into automation. Day to day, this would feel like your rent renewal comes with another big jump, your card minimums creep up, and your job feels like musical chairs, always one reorg away from trouble. You'd feel like you're running just to stay in place.
Path 2. The resilience path. This is where the system bends back. Central banks slowly ease rates without letting inflation roar back. Businesses keep investing in people alongside tech, and governments patch some of the worst holes, like housing supply. In that world, your life might feel like raises finally start to outpace your rent, fewer surprise spikes in your grocery bill, and your job still changes but doesn't feel like it's hanging by a thread every quarter. The background anxiety would dial down a notch.
But in both paths, one thing is the same. You still have levers. You can't choose the global path, but you can choose how much high-interest debt you carry, and whether your skills match where the money is flowing. The world can tilt either way, and your job is to make your own household less fragile in both scenarios.
So, how do we make our own corner less breakable? What are the immediate actions? We have three main levers. Attack the leak. Debt. Lower the high-interest fixed costs that trap you. Call your lender before a rate reset, or focus every extra dollar on high-interest credit cards. Build the buffer. Savings. Set up an automatic transfer to a boring, high-yield savings account. That small, boring move is your shock absorber. Future-proof your role. Skills. Nudge your skills toward the parts of the economy that are getting investment, not cuts. Spend an hour a week learning a skill your future employer will care about, especially around new technology. Final takeaways and emotional bottom line. Approximate 3 o'clock.
If you're walking away from this thinking, oh, that's why my life feels like this right now, hold on to that clarity. Give yourself some grace. If you're stressed or scared about your job, that's not a personal failing. It's a rational reaction to a strained system.
And remember the kitchen. You may not control the whole building, but you can fix leaks under your own sink, swap out a dangerous outlet, and learn how your breaker panel works.
You won't feel the payoff overnight, but over a year or two, those small, boring moves are what turn one shock away from crisis into, this is stressful, but we'll manage. In a fragile boom, the people who sleep best aren't the ones with the flashiest investments. They're the ones with the thickest shock absorbers.
You're not broken. The system is strained. And you're allowed to feel scared and hopeful at the same time. Scared because the cracks are real. Hopeful because you still have levers to pull. Take a breath. Pick one tiny action you can take this week. Not 10, just one. And let that be your first patch on the plumbing.
You can't fix global fragility on your own, but you can make your own little corner, your job, your budget, your skills, a lot less breakable. And in a world like this, that's not nothing. That's power.
We'll leave it there. Thanks for listening.
Disclaimer: this conversation is an informational synthesis of recent data and does not constitute investment, legal, tax, or financial advice.